Hey guys, Stock Saturday, and it's a down week, a couple of percent down this week, but the market's down a couple of percent, so it's not a disaster. Finally, sort of for 1 week out of the last couple of months, not underperforming. But yeah, it's a bit of a sort of heavy news week. No earnings again this week. It'll be sort of a couple more weeks, few weeks until we start getting into Q2 earnings, but there is an awful lot of news sort of happening at the moment, so let's have a look. So this might not be a huge one to the rest of the world, but is sort of fairly big for us. We had our monetary policy committee meeting this week after the Fed one and ECB one last week, and we did a surprise raise of 0.5% to 5%. Was expecting 0.25% sort of up to when the inflation numbers came out, really, and then sort of a lot of people were saying that they would probably do 0.5% because it wasn't good, which I will come back to in the roundup of all of the numbers. But yeah, I did like Rishi saying that everything's going to be okay, and that he's 100% on it. We've had Jeremy Hunt meeting with the big banks, and sort of not a lot seemed to have come of that. They're saying if you've got a mortgage, you can go interest only for up to 6 months, and then back to repayments. That sort of is a little bit of help, I guess, but not really. It's just delaying payment, but I guess they don't want to be handing out money, and they're saying their target is still to halve inflation this year, which actually coming from 10%, we're at sort of 8.7. I assume they mean on the headline rather than core, but 8.7% at the moment, so to get to 5 by the end of the year actually doesn't seem that big of an achievement, really. Sort of the rest of the world seems to be coming right down, and yeah, whether what we've got going on at the moment is sort of temporary remains to be seen. But another sort of 6 months or so to come back down to 5 from 8.7 doesn't really seem like that big of an achievement, and certainly isn't something I would call a success if other countries have sort of largely dealt with their inflation by then. But yeah, I'm sure they're going to be sort of cracking the party poppers if they do it, even if everyone is worse off. But I expect this tightness recently has been contributing to sort of outperformance in the pound. This is sort of partly a weak dollar story as much as it is a strong pound, but it certainly affects us in the UK, and a lot of people have sort of been noticing portfolios not doing as well as they might have thought, and sort of couldn't really see why, and I expect this may be the case. You look at sort of certainly the last 3 weeks, you know, you've gone from $1.23 and a bit to $1.27, was sort of $1.28, and yeah, your FX movements are going to be sort of taking quite a hit on that if you're in foreign stocks. Certainly the pound euro is sort of similar. So you can see on the dollar index, this is sort of peaks basically in about September, October time last year, and has been coming down quite a bit, and has sort of rested in this sort of 100 to 105 range. It'd be interesting to sort of see where it goes from here. If we do get a reasonable recession, people you would think would sort of fly to safety in the dollar. You might get a bit of a rise, and so this sort of pound dollar might come back down again, but yeah, we'll have to wait and see. But with all this rough times, I am certainly keeping an eye on gold and silver still. One of the people I do like to follow, Bob Lucas, sort of does a lot of work on cycles, big believer in that, and he sort of sees a long-term bull market, sort of an 8-year bull market for gold starting out, and I've been sort of biding my time, waiting to add more, and he's sort of thinking last few days certainly we've been having a down move, and not quite sure it's going to get here. We are sort of actually about here now. This was from a few days ago, so maybe Monday or Tuesday. We were sort of thinking would be roughly the bottom. Looks like we could be just sort of holding the $1,900, but even if we do, I think I'll probably just take that as decent, and maybe move a little bit more into the gold miners. Sort of thinking that would be a cycle bottom, and then we would carry on the sort of longer term bull market, with stocks looking sort of pretty high at the moment. Obviously my shorts on NASDAQ and that sort of thing haven't gone well, but yeah, it's not a place that I would want to be sort of too much in, and can see gold and silver sort of outperforming really if we do get into a sort of reasonably rough recession. So I'm looking at still Equinox Gold on their sort of lofty goals of mining 1 million gold ounces a year. It looks like they are going to be sort of pretty much there by middle to the end of next year, which would be good. And Core Mining on the sort of partially silver side, they've got sort of the silver mines aren't going to last forever, but what they've got now should be doing sort of 10 million ounces, I think, this year and next year. So yeah, that plus 280,000 ounces of gold, I think is pretty good at these prices. So I think I'll be carrying on into those. So news, just to sort of delve into the inflation numbers a little bit more on the UK. We had a core CPI monthly figure higher than expected. Last month's was 1.3%, which was a disaster. Expected to be 0.6% this month, but was 0.8%, so that's pretty bad, and that has put the annual into an increase, which was expected to be flat, 6.8% for the year last month, and was expected to stay there, and it's gone up to 7.1%. So pretty much the rest of the developed world is decreasing, sort of some at faster paces than others, and we're increasing. Obviously you've got, Turkey and Argentina and all them sort of countries that are still sort of having incredible high inflation, but, your US, your ECB and sort of various countries are still sort of decreasing. So you look at sort of the individual months, this still looks awful, really. You do get these outliers in February, it seems, every year. But on the whole, it's not getting any better. You look on the sort of annual, it sort of was resting around 6.5%. We were thinking starting to come down a little, but no, it has increased. So whether this is the sort of wage spiral that is contributing to this, they've been sort of saying, their comments that are making the headlines, we've got to accept being poorer, and we've got to stop asking for pay rises. Doesn't seem to be the case, which you can understand. Prices are going up and people are going to demand a pay rise. It's not as if they were demanding a pay rise before the inflation was there, which then caused inflation. I do think it's, as Damien Talks Money has sort of pointed out, he calls it a price wage spiral. Prices have gone up and then people ask for a pay rise, and then maybe that causes more inflation, but it's the prices that happened first. They do seem to be sort of blaming the inflation itself, even the initial inflation on wages. So yeah, not quite agreeing with that. But I mean, if you look at the headline number, which makes the headlines and is what Rishi and Jeremy Hunt are saying they want to halve, that's stayed at 8.7%, which it did get into double figures and it's sort of come down from there. But yeah, I think the core is sort of what we really want to be looking at, because you would expect energy price to have a big effect on this coming down, but if the rest of it isn't going to, then that's more important. So focusing on core, which just excludes that energy sort of fiddling with the numbers, is I think best thing to look at, and that is at all-time highs and still rising. So yeah, have to see where this goes. The monthly sort of headline CPI just looks all over the place, really. And then, yeah, so as a result of that, you had the 0.5% interest rate rise as opposed to 0.25% that was expected. You had 7 people vote for that hike. 2 people out of the 9 voted for unchanged, which is interesting. Potentially, they could end up being right if the sort of rate rises do have a hell of a lag, and we sort of haven't really felt the effects of previous rises. That certainly seems to be sort of the general thinking in America, at least. But yeah, still 2 of them sort of voting unchanged. And then, yeah, had some US job numbers, not really a huge sort of significant move in those. And not really a huge amount after that, so it really was a sort of UK focused week. But yeah, it is sort of bringing potential moves into line now. So I know I keep saying it, but I'm sort of biding my time, waiting to possibly sell out of the Vanguard emerging markets and Meta platforms, sort of still holding on, and it's still sort of rising, trickling up to 188 now, and I'm sort of back over 50%, I think 52.5% with the FX impact, and yeah, getting towards £7,500. So with that and the emerging markets, and if I put the cash into the ISA, that will be sort of getting on for £18,000, so that's pretty much the ISA filled, and I could spread that between the gold and silver miners. Could put maybe a little bit into some of the REITs that have been a little bit beaten down, but I still kind of think there's maybe a bit further to go with those. So yeah, could just split it between gold and silver miners and maybe a little bit more clean spark. I did sell off the Bitcoin ETF, the spot ETF, as you'll see there. Got a message in the last week that is going to now be banned in the ISA, which is disappointing, really. Don't really see the difference between a physical or spot Bitcoin ETF and a gold ETF. They're both, if you think one is a derivative, then the other is a derivative. So yeah, that was a bit disappointing, but so I had to either sell that and or move it out to the invest account, which I don't see the point in doing that. The whole point of having it is to have it in here tax-free. If I had to hold it in the invest account, I might as well just hold real crypto and not pay the fee. So I had to sell that in the next 2 weeks. I decided to just sell it now and put that into CleanSpark. So I wanted that to be a sort of crypto to crypto move. So that made sense. But yeah, potentially putting sort of new money, if you like, into it with the emerging markets and Meta platforms money. But we'll see how things go. So yeah, other than that, the REITs have been sort of hit pretty hard. Tritax, Eurobox, chief amongst those, but Big Box has sort of had a reasonable move down as well. As I say, I think probably the real estate market as a whole still has further to go. I think the industrial side would sort of hold up better. Certainly the occupancy rates are still higher on the industrial side. And you've got things like, Vici holding up really well because their tenants aren't going to suddenly leave. Those sort of massive casinos, they're doing fine. But yeah, in the invest account, sort of had similar 1-2% moves sort of down across the board, really, apart from Meta, which is at sort of recent highs. But yeah, nothing to sort of worry about too much there. As I say, I've pretty much matched the market, down sort of about 2% on the week. Obviously, things like CleanSpark sort of helping me out. That's had a decent move up with the Bitcoin run recently, but hopefully still a hell of a lot further to go. Pan American Silver sort of dragging me down there. I don't feel like adding to that. As I say, I'd rather add to Equinox and Coeur Mining, possibly Fortuna Silver. We'll have to see. I will have another review. And then Interactive Brokers, Chinese tech sort of not really moving at all. I am buying more options, which I don't really show here. Sort of getting more options on the gold and silver miners, really. I've taken a few on Coeur Mining because they're offering December 2025 options. So that gives sort of 2.5 years for that to sort of do well, silver price to do well, hopefully, and certainly on the gold price. But I'm sort of expecting a reasonable move on silver by then. So yeah, the Interactive Brokers account is probably about just over £6,000 rather than what I've shown here, because I don't think I can get the option prices on here. But if that starts to sort of get larger, I am thinking of sort of adding maybe another £1,000 to be having a bit more of a play on options. And yeah, maybe I'll start to sort of show just the total here, if nothing else. Looking at sort of CleanSpark ones as well. They are a little bit pricey, but obviously I can see a reasonable move in those in the next sort of year and a half, 2 years. So even maybe overpaying for them a little bit might still be worth it. So yeah, that's the portfolio for the week. Leave your thoughts in comments below. What you're buying, what you're sort of taking profits on, and like and subscribe. See you soon.